Multiple streams of income is not necessarily how successful people get wealthy. It's how they stay wealthy. What wealthy people do to get to that point is take $1 and find multiple ways to get use out of that dollar. Whether it's getting other money, building their credit while getting money, acquiring assets while starting business, they find a way to multiply the use of every single dollar. I'm going to show you using the Navy Federal Pledge Loan strategy how to do the same thing. What you're going to want to do is obviously have money saved. You're obviously going to want to be within Navy Federal, or honestly, this works just fine in any credit union or small bank that offers savings or CD secured loans, and they don't hard pull you to do so. First Tech does, for an example. Once you have enough cash saved towards either a down payment or the cash purchase of a property, we're going to call it either a single family, long-term rental, or this works fine if you're getting into the short-term space and you want to get those unique alternative deals like the tiny homes and the A-frames and things of that nature. As long as it's within the range of either a down payment towards that in financing or complete cash buy, the strategy is going to work really well. What is it going to help you accomplish? It's going to help you accomplish building a great internal score with Navy Federal or any other institution you're doing this with. It's going to help you still have the capital that you need to deploy into the deal at a very, very cheap interest rate. And it's going to help you build probably the most important, a fortress credit profile, because installment loans are monstrous on credit profiles and people don't talk about this, especially when you get up to 5 figures and higher. Credit profiles and the credit algorithm and lenders love to see installment loans. You're going to accomplish all three of these instead of just taking that money cash and buying that property cash outright or buying it as down payment outright. You're missing 2 out of the 3. You're only acquiring the asset. You're not building the internal score, and you're not building out your credit profile. So you're going to want to take the money you have saved, deploy it into a savings or CD secured loan in whatever institution, but we'll just keep sticking to Navy Federal for now. They're going to give you that money back same day or the next day. You're going to take it and deploy it into your real estate deal. You need to close relatively fast, because once this new pledge loan shows up on your credit report, it could ding your credit as as new debt. Okay, so keep that in mind. And it usually takes about 1 to 2 credit cycles to show. So you have around 30 to 60 days to employ this strategy and take down that real estate, especially if you're going to use financing and get your credit pull. You want to get this done fast. But if you're buying rentals or if you're buying some kind of tiny home, you're usually going to be able to do this in less than 60 days, or maybe even less than 30 in most cases. That's the point of layering your debt or structuring your financing, to be able to take these deals down quickly. Once you have that accomplished, then you want to make sure that deal is going to obviously cash flow, or, you can refinance out in about a year or so or less, because you're going to want to get that money right back out. The goal, of course, is to be able to make sure that the income coming from that property is going to sustain your debt payments, and then you're going to refinance out when the time frame calls for it. So you want to make sure you have all of that exit strategy built in. But what are you accomplishing? Again, you're building a massive internal score. You are still acquiring the deal that you need to acquire, because you have to remember, pledge loan debt is extremely low interest rates. We're talking about usually, at least at the time of this recording, less than 3%. Do your homework at the time you catch this recording, but it's usually less than 3%. So you're paying next to nothing for this money. You're building an internal score. It's extremely cheap, and you're still deploying cash into the real estate deal. So now when you go to those who you're buying the property from, they still see you as a cash buyer, or at least with significant equity in the deal. So it looks good across the board, and you're still taking the same money, the same 10, 20, 50, $100,000, and putting it into that capital at a very, very low interest rate. You have to remember, it's in a savings or a CD, so it's still earning interest, which negates some of the little bit of interest you're paying on it. You see what I'm saying? You're accomplishing multiple functions using this strategy. So you want to make sure, again, caution, it could hurt your credit once it reports as debt on your credit report, but you're acquiring an asset, you're building an internal score, and once you refinance out, get the cash and pay that debt off months later or a year or so later, you're going to have a fortress credit profile. We're talking titanium, because you're going to have installment loan history on it at a really high scale. This is going to allow you to extrapolate out into more real estate deals and business ventures. We're using your personal credit, building business funding, building business credit by using your personal credit. It's not just going to be high limit credit cards. Installment loan debt helps you build that out. So this is how you become successful in America's economy, in this economy today, you have to start putting money to work in multiple different ways. Comment down below and let me know your thoughts on this strategy. Comment down below and let me know what your real estate investment goals are. Are you actively investing, or what are you planning to invest in? How can this strategy work for you? Comment down below if you have any kind of kickback towards this strategy. We can talk about it in the comments. To all my pioneers, welcome back. To my new viewers, welcome in. You want to learn more about myself and the channel? Start in the description and work your way to the About section. Of course, subscribe, like, share this with anybody you think that can get value, or if it's just a good conversation starter. Other than that, I want y'all to stay focused. Stay in motion. I'll see y'all soon. This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.